The next stock on the list is a company many are familiar with, and that is Chewy. Chewy dominates the online pet retail market. In terms of products, Chewy offers a wide range of pet supplies, including food, treats, toys, accessories, and medications for various animals. They also offer services, including 24/7 access to pet experts, auto ship for convenient recurring delivery, a pharmacy for prescriptions, and recently launched pet insurance and wellness plans under Chewy Care Plus. Chewy is also launching Chewy Vet Care, offering in-person veterinary services alongside their online offerings. Chewy is benefiting from the shift away from traditional brick-and-mortar stores. For example, Petco recently reported that their revenue dropped by 9% in Q4, following an 8.8% decline in Q3. Meanwhile, Chewy saw a 4% revenue increase in Q4. However, this puts Chewy in direct competition with Amazon, which is definitely a fierce competitor. As far as the operational performance goes, Chewy has been on a sustained path of revenue growth over the last 5 years or so. They've also improved the efficiency of the business, which has resulted in growing free cash flow yield, currently around 5%. From a balance sheet perspective, Chewy has a substantial amount of cash and short-term investments, surpassing the total debt levels by twofold in the most recent quarter. However, the CEO has an approval rating of 69%, and the overall workplace rating is 3.5 out of 5. Both of these are a little on the lower side. However, this David versus Goliath situation of being in direct competition with Amazon has hammered the share price. Our analyst calculated an intrinsic fair value of $43.22 for Chewy stock, which could mean undervaluation of about 64% compared to the current share price.